this shows that the rush towards gold is just beginning by sovereign countries. Tuesday, March 26, 2024, Monaco 64, home of alternative economics and contrarian views. We're going to look at the World Bank. Yes, the World Bank, which was co-founded by John Maynard Keynes and Harry Dexter White. Yes, that World Bank. They're writing reports and instructions for countries' asset managers on how to acquire gold and how to have gold in their reserves. I think it just goes to show that the Barbarous Relic is far from being a relic. And I would say John Maynard Keynes is probably rolling in his grave to see that gold is still so important almost 100 years after the World Bank was founded, in the aftermath or just at the end of World War II. We're also going to look at commodities. Of course, gold is a monetary commodity, but I think gold is also pointing to general commodities making another move higher. I've been telling you that I think we are in a major cyclical commodity bull market ever since late 2019. And one of the reasons for that is because investors and speculators have focused too much on paper assets, on tech. And I think there's going to be quite a bit of diversification away from that into hard assets and commodities in general. And it looks like the World Bank kind of sees this coming as well. Before we look further into the topic of the World Bank, gold and commodities, just wanted to talk about the Dirty Man's Safe. It's a great way to bury your treasures and not your fears. So I've been an affiliate with them for almost a year. And yeah, the people who have bought the Dirty Man's Safe, they're really happy with it. I think in this day and age where the rule of law, private property is under threat, even in the United States and in the United Kingdom, where we've had the rule of law and private property respected for centuries, I think it's a good way to protect your gold, silver, or whatever you want to put in it. It's durable, stealthy, and smart. And it's your underground guardian. So if you want to find out more, go to the description of this video. I have an affiliate code, Monaco10. You get a 10% discount if you use that code, if you're interested in buying the Dirty Man's Safe. So back to gold. So yes, you probably you're probably tired of looking at this, but yes, there we go. We're gonna rub it into the FT again. They're saying almost 20 years ago now, well, 20 years ago next month, that gold was pointless. Going gold. The pointlessness of holding bullion continues to sink in. There you go. I don't see the general public out there or mainstream media pushing gold yet. They're pushing other things that I won't go into. But this is interesting. This has just come out. This is what I wanted to talk about. Gold Investing Handbook for Asset Managers. Yeah, this is from the World Bank. It's not from Incrementum AG in Liechtenstein, the people who publish In Gold We Trust. No, it's from this international organization that was organized by an uber Keynesian. Well, he was Keynes, right? And a guy from the US Treasury who was later accused of being a Soviet spy, Harry Dexter White. So, yeah, and this was published this year. Let's see if we've got a date. No, it doesn't have a date, but I think it's come out very recently. And the World Bank, of course, is a sister institution to the IMF. So let's see what the World Bank is saying about gold in their introduction. This is like a manual for asset managers, I would say, in world treasuries of how to get involved in the gold market. Of course, the Chinese, all the major BRICS countries or Global South countries are already getting involved. So I'm not sure they need any kind of instruction from the World Bank. But this shows that the rush towards gold is just beginning by sovereign countries. Yeah, I don't think they're going to be buying Bitcoin except for a small nation like El Salvador. So let's quickly go through this. It says, throughout history, gold has played a vital role as a financial asset in the global financial system. It has been prevalent as a currency, there you go, as a currency in many civilizations, including ancient Greece, Rome, and Egypt. In the modern era, gold continues to play a critical role in the global financial system, serving as a hedge against inflation, a safe haven asset, and a reserve asset for central banks. In the 20th century, how gold was used in financial systems underwent significant changes. The gold standard, which tied the value of paper currency to the price of gold, prevailed until the 1930s, when it was abandoned by most major countries due to the Great Depression. Well, it was due to the bankers really abusing their reserves. They just issued too many loans. And the gold standard really was not, it was the paper currency that was tied to gold. The paper currency was just a receipt for money, for gold. But anyway, we can't be too tough on the World Bank, right? However, the gold standard, well, again, I would say it's the gold exchange system of the Bretton Woods, but they say the gold standard remained a critical part of the international monetary system until 1971, when the U.S. government ended its convertibility to gold. I would have said when the U.S. government defaulted on its gold obligations, but again, let's not be tough with the World Bank. In recent years, gold has regained its importance as a financial asset, with many investors using it as a hedge against inflation and market volatility. In addition, central banks and other financial institutions continue to hold significant amounts of gold as part of their reserve assets. The role of gold as a reserve asset for central banks has been a significant driver of demand for the precious metal. Gold is also considered a safe haven asset during times of economic uncertainty and geopolitical turmoil. Well, we've got that in spades right now, making it popular among investors looking to hedge against market volatility. In addition to its role as a reserve asset, gold is a widely traded commodity in financial markets. Gold futures and options are actively traded on commodities exchanges, providing investors with a range of investment opportunities. Gold is also used in the production of various industrial and consumer products, including electronics, jewelry, and medical devices. Well, I'm not too keen on the trading part of it, because they do talk about COMEX and LBMA futures trading. I would tell the asset managers of these countries to ignore these trading vehicles. Gold is not a commodity to be traded with. It's too important. It's a commodity it's a reserve asset to back your currency. You need to leave it alone and not put it at risk by leveraging it with the bullion banksters. Anyway, let's continue. The increasing awareness of environmental, social, and government ESG. Well, I'm not going to go over this because you know how I feel about ESG, but they're pushing this agenda. They think gold could be important in this and that mining should stick to ESG. But we're seeing that ESG is being abandoned by states like Texas and others. The role of gold in the global financial system has evolved over time with changes in monetary policy, economic conditions, and technological advances influencing demand and supply dynamics. Despite these changes, gold remains a crucial component of the global financial system and is likely to continue to play an essential role in the future. I'm going to stop right here. There's a little more that they talk about. And one thing that's very important, I think, about this is that if the World Bank is pushing asset managers of sovereign nations to get involved in gold, you can bet that asset managers in the private sector are going to do the same. And gold is just a very tiny part of asset managers' holdings. I think it's something like 1%, maybe a little less. So if you triple that to 3%, which isn't great, or even if you go to 10%, can you imagine what that will do for the value of gold vis-a-vis paper currencies and other things? I think it will be quite significant, and that's why, gold is not going to go anywhere. Gold is not going. Gold is not a Barbarous relic. So let's skip to the CRB index, which is a basket. It's a Commodities Research Bureau index. And it's an index of 19 major commodities. Gold is included in there. And I've spoken about this recently. And I even have a playlist about the commodities bull market. And I think it's a secular bull market. And many people do as well. And it started after the collapse in March 2020, when the CRB really crashed to multi-year lows. That's when gold corrected from around 1750 to 1450, and then it just went up from 1450 very quickly to above 2000, and it led the way higher for the general commodities. And I think the same thing's happening now. And despite having had like a consolidation in the commodities market since May 2022 or thereabouts, it looks like we're picking up again and we're breaking out in commodities. At least we're breaking out of this falling wedge. We still have a ways to go to break the high that we saw in 2022, as you can see on this chart. And there are a lot of indicators out there, like gold breaking out, and also like cocoa, which is going through the roof, which is really crazy. Yes, there must be some kind of fundamental reason in the cocoa market to do with the cocoa fruits, the crops that are coming out, some kind of trouble. But I think it's more of a signal that, we're going to see continued inflation. And by inflation, I don't mean that these commodities are causing it. I mean that the central banks and governments are going to continue to spend, print more, increase monetary policy, increase the size of their balance sheets. Central banks and the governments are going to continue their reckless fiscal spending, and that's what inflation is. It makes the currencies worth less, and if currencies are worth less, real things are worth more, and this is what the CRB is reflecting. Is it any wonder that the World Bank has come out with this report on how to buy gold, really, and hold gold for the people who run major countries' treasuries. I don't think it is a coincidence. They can see the writing on the wall. So yeah, that's how I see the CRB. I'm not here to tell you where to invest and how to do it. I'm just giving you a bigger picture, a macro view here of what's happening. Nowadays, it's not an excuse that you're not a specialist. You can do your homework online. You can search for everything, and I'm sure you'll find out a way to participate if you want, or even speculate in this coming commodity bull cycle that I think started back in 2020 and has got a lot of legs still. And this is, of course, just my opinion. I'm not telling you to do it. So let's quickly look at where the markets are this morning. It's 8:40 a.m. London time. So we've got spot gold at 21.78. That's up $7. Right near the highs. High has been 79. The low has been 67. And in terms of technicals, and I know I don't trade gold. I did trade gold futures many, many years ago when I was still working in the city for myself. But it's just interesting to talk about. I think a key support here is going to be around 21.48, 46 as well. That's been a recent low, and it was the high on that spike that we had in December last year. So I think that's a key level. And if you're looking to get involved in buying physical, I think the best way to do it is dollar cost averaging a little bit whenever you can. But it's good to know these levels as well. It might help you save a little bit, or not really save, but it might help you get more for your rapidly depreciating fiat currency. So what about silver? Yes, silver is still lagging here. It looks like right now the powers that be, the central bankers and the bullion banks, want to keep it below 25. We're at 24.62. It's down 4 cents. To the stock market, the Dow futures is up 53 points. The NASDAQ 100 futures up 82, and the S&P is up 14. So stock markets are pretty firm overnight here before we open. What about the currencies? They're pretty steady. Not much really going on here, so I won't go through them. What about the commodities? Well, WTI had a good day yesterday, or crude oil. We went up to 82 or thereabouts. Overnight, we made a high of 82.20. Right now, we're at 81.73, so it's pretty much unchanged. Brent traded up as high as 86.45. Right now, we're trading around 86. High-grade copper has corrected a little bit from the rally last week. We're now around 402, down 0.25%. Platinum, that's unchanged, trading around 905. What about cocoa? Well, cocoa, I don't think the New York cocoa has opened yet, but yesterday it was up another 8.5%, New York cocoa, and it settled at $9,301 per metric ton. And just to give you an idea, last year around this time, let's see, cocoa was trading below $3,000 per metric ton. So it's more than tripled in the last year, the price of cocoa. You can bet your chocolate bars or your Snickers or your Mars bars and all the other chocolate bars are probably going to be going up in price very soon. Of course, finished goods like that don't react immediately to these prices of the raw material used to make them. because a lot of these producers or companies, they have contracts with the sellers of cocoa that last a certain period. So that's probably why, and maybe after the middle of this year, you're going to start seeing the price increases there. So we're going to end here with cocoa and chocolate, and I'm going to wish you a very good day. Take care. Bye.